Hi, it's Jason here with the crowdedmarketreport.com. Taking a look at today's markets, we finally got a little bit of volatility here. Stocks came off. I guess the story was Walmart earnings were not up to snuff, and therefore that indicates that the consumer is starting to falter and all that. And I don't know. Maybe that's true. S&P wasn't down very much. The markets, if the consumer is about to falter and the whole economy is going to go in the toilet, then you can sell it still pretty darn good right here. One day off all-time highs, right? Which is, 27 points or so on the S&P. The people who did sell the S&Ps today, essentially everybody who sold after the market opened 9:30 is out of the money here. It wasn't really that weak a day. But I think it's really more, they're moving now from, on the political front, they're moving off the tariff theme as the major thing to the to the Doge thing, and they're really starting to get aggressive there. And they're, if I had to guess, I would say we're a hell of a lot closer to the beginning of that than we are to the end of that. And that's going to be, that's going to need some adjustment. I still feel that if the market is going up, which I kind of feel it is, it's going to be a stair step, 2 steps forward, 1 step back, 3 steps forward, 2 steps back. And it's going to make it very difficult as a trader to kind of hold on to this stuff, which is kind of how the market works over time anyway. But that's kind of where I feel we're in here. And the Doge thing, like I say, it's going to take some adjustment, and not only because people are getting fired and all that, and obviously a large part of the hiring that's been done in the past however many years, dozen years, a large part of it has been government hiring, and now that's being not only not being done, it's being reduced. Those people theoretically will get jobs in the private sector, or whatever, but it's not going to happen overnight. There's going to be some adjustment there. And the markets are going to have to react to those adjustments. If they believe that this is a long-term good thing, then it'll probably stair step up. And if they decide this is a long-term bad thing, then we got a whole nother story going on. But I think that the administration has indicated that they don't really care about short-term effects. They're trying to solve long-term problems. And if that's the case, I think that's a good thing, because you're either going to pay big later, pay a little bit now, or pay a lot bigger later. I think that paying a little bit now is a much better option. I don't know if that's what's going to happen, but that's what they're talking about, and that seems to be what their actions are about, at least part of their actions. So I think that's really the major story, and this is what we're going to have to start adjusting to, the daily Doge stuff. How many people are getting fired here, what they're cutting there, what funds that were going out are not going out anymore, and how does that affect the economy? That's going to be the big story, I think, from here out. For a while. So we still got plenty of time to go with this whole, Trump administration changes. So anyway, that's kind of what stocks did today. Bonds were, up a little bit. I guess if there was a little bit of a surprise, you could call it the dollar. The dollar has been going up really since election time on risk off stuff. The tariff stuff will come out. That was seen as risk off. The stocks would go down and the dollar would go up. Today, the dollar really never went up. It went down as stocks were weak, and it just stayed down, which is okay with me, because the only position I have is really on a short dollar trade. So I'm fine. I'm okay with that. But why it happened and why it's changing, I don't really know. But that correlation is breaking down somewhat. And the other stuff was relatively quiet. The metals got a big pop overnight and then kind of came off and probably lost half of that during the day. Nothing really there. Bitcoin had a nice rebound today and was back in charge after really not going up as risk assets were going up. It now decided to go up when risk assets weren't going up. The correlation there is certainly breaking. The idea that Bitcoin is just another risk asset, it's just another NASDAQ type of thing, has not been the case for a good month now. And maybe that's a good thing for Bitcoin, non-correlation helps your portfolio more than just leveraging a long trade. So maybe that's a good thing. I don't know. But in general, that's kind of what I saw today and this week type thing. pretty interesting. But again, we're one day off of all-time highs in the S&P. We have the German elections coming up Sunday, which should probably cause some volatility over there. I was actually sitting with a guy who lives in Germany today, who feels that it's probably the pro-growth people that are going to get in there. That's clearly what the DAX has been doing, discounting that possibility. And so what now is going to be the case. But, they clearly have the election's not a guarantee. So, some people are going to take the profits here. And then let's see how it reacts to that. But it's all sort of intertwined here with this. The whole world is kind of moving that way. And that is supposed to be bullish economic growth. It's just a question of how does the market adjust to the changes, and therefore what's the path going to look like? And again, I personally am a believer that it's going up. The market's going up. They're going to like this eventually, whether they're right or wrong, but the path is going to be a choppy one. That's my big feel here. So anyway, I hope that helps. I hope everyone is having a good week. Tomorrow we'll get COT, so we'll get some more positioning information. That'll be great. And then we're off to another week of the whole circus. So hope everyone's doing well. Please, if you like the video, please like it. Questions, comments, always welcome. Check us out, crowdedmarketreport.com. And thank you. We'll talk to you soon.